Tonight on Market Call, David Burrows is on the show, President and Chief Investment Strategist at Barometer Capital Management. He's taking your questions on North American large caps. Hello, I'm Greg Bonnell. Welcome to Market Call tonight. Give us a call, toll free, 1-855-326-6266. You can send an email to marketcall@bnn.ca or you can tweet us at Market Call. Good to see you, David. Pleasure to have you back.
Great to be here.
All right, so let's talk stocks, North American equities. Are we finally at a stage now where we're buying and selling on fundamentals after an earnings season to assess the strength of these companies? Or are we still on a hope and a prayer that Trump's tax agenda will get through and everything will just be just fine?
So, you know, Greg, I'm a strategist, so I'm a macro guy, and Barometer is all about trying to identify structural themes where you had some kind of shift that can lead to a revaluation of an asset over a long period of time. And really, you know, North American equity markets made new all-time highs in 2013 for the first time since the 90s. We rallied 2 years into 15 and corrected around the world. And since February of 16, the market has just been slowly marking its way higher. And people like to attribute it to lots of different things, but the reality is we began a long reflation of equities in 2016. And since then, economic data has slowly been improving, earnings data has slowly been improving. In the last number of quarters, revenues are accelerating. So it's not about Trump, it's about a combination of things. But underlying, we really have a synchronized growth going on around the world. And equities are a really attractive asset class when you have the beginnings of reflation. It can go on for a long time.
Now, some people are worried that we could get, as we've been grinding to those new highs, the S&P breached another historic landmark today, that we could get a pullback in the new year, anywhere in the range of 5-10. Some people even worry about a 20% pullback. Would you see that as a buying opportunity, or would that be the end of the party?
So when you've lived through lots of years of uneven markets, you see a boogeyman around every corner. And the hardest thing in a bull market is to stay in your winning positions. So I know everybody worries, and that's a good thing. But if you looked at the 3 years that came after the first major correction in the bull market of the 50s, you rallied for 3 years with no volatility. If you looked at the rally that came after the first major correction in 1984, the 80s and 90s bull market, you rallied 3 years with no major corrections. So we're now 18, 19 months since February 16. We've been getting 3 to 4% corrections. Everybody worries about 8 to 10 or 12 or 15, but it's not coming because there's people sitting with cash waiting for it. So I actually think the market probably rallies longer than people expect. At some point over the next 12 months, you are going to see a real correction. And then you probably get another 3-4 years of good markets after that. So, you know, we're in a market right now where there's some very clear structural winners, certain industries that are got a big tailwind. And I don't think you have to overthink it. You don't have to own everything. Today we hit 15-year lows in correlations, meaning there's things that are doing really well and there's some stuff that's doing really poorly. So you can buy the index or you can be targeted in very specific themes and actually do a lot better. And so it's a really productive period to be an equity investor.
In terms of the broader play, the big move was out of defensives into cyclicals about a year ago. Now the herd has made that play. Are you still in the cyclicals and then you start picking your spots in cyclicals?
Well, you know, let's talk about that for a minute, because flows out of bonds have barely begun. And they've been flowing into bonds for 40 years. So low vol has done less well than some of the reflation, like industrials and technology, some consumer cyclicals. But I think it's still relatively early. Like if you look at financials as a play on reflation, you know, rising rates, better economic conditions. You know, the U.S. banks are trading at 1 times book value. They traded at 2 to 3 times book value in the past, and book value is growing. So I think it's actually very early in this process, and there'll be interruptions. But these structural themes probably go on for years.
All right, fascinating stuff. We're going to be back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management. He's answering your questions about North American large caps. So give us a call, toll free, 1-855-326-6266.